Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, markets analyst at FX Pesa. So we know that today is Thursday. We normally do these at 8 p.m. But today, caught between a rock and a hard place, we had to do it now. And this is the best I could do today. So right away, let's start on the session. Apologies for that. So let's jump right away and look at what has been happening in the markets today. And once we understand that, then we move on to what we will be expecting in the markets going forward. So it's quite an eventful day. So we heard a lot of news that did not have as much impact in the markets, including New Zealand commodity prices, data month over month. We had financial stability review in Australia, trade balance, Chinese Kaizen services PMI, which came in at a very good number. But then the juice was on this afternoon when we looked at Canadian jobs data as well as US unemployment claims. So Canadian jobs data came in better than expected with that 4.7 thousand jobs created in the month of March versus an expectation of 10.2K. This was clearly an outperformance. This was really good for Canada. So whereas on one side, investors are focused on what the central bank will do. The Central Bank of Canada has maintained a stance that it has ended the rate hike cycle. So we are not expecting any further tightening. So with the job market improving at this rate, then we can only expect one thing, that is people will have more money in their pockets as a result of higher jobs. And in this case, we'll be expecting a much weaker Canadian dollar. Unemployment rate remained at the same level at 5.0%, despite an expectation that it would rise to 5.1%. Then the big surprise today was on unemployment claims. Remember, for the better part of the year, January, February, we saw a big surprise in the non-farm payrolls in the US, where the US was creating jobs at a much higher rate. However, the unemployment claims being on the rise from the previous reading of 246K, now we have 228K. This is not good for the US economy. So if unemployment claims are rising, then it can only mean one thing, that the economy is weakening in the US. So there's more details on the data. So if you click on the data right here and then go to the actual report, then you'd see that more Americans are taking a second or even a third job. And this is not very promising. So immediately after this, now all focus moves to tomorrow's job data, and that will be the non-farm payrolls. So in the previous reading, there was a deceleration of our average hourly earnings to 0.2%. We expect this to rise slightly to 0.3%. However, for the non-farm employment change, in the previous reading, the US created 311K jobs. So we're expecting a smaller number of 236K jobs. So if this number is surprisingly low, that is lower than this, then this could cause a lot of volatility. Remember, it's a bank holiday tomorrow, it's Good Friday, so equity markets as well as commodity markets will be closed. So we expect only activity to be happening in the forex markets. So unemployment rate is expected to remain relatively the same at 3.6%. And also we'll be looking at consumer credit, which stood at $14.8 billion. So we're expecting this to rise to $18.3 billion. So we know that interest rates have been on the rise since last year, currently hitting 5%. So with Fed interest rates at 5%, then we expect consumer credit to be on the rise, and it's approaching dangerous levels, and we could be seeing defaults happening this year, especially in the mortgage sector. So mortgages are already seeing unprecedented level of defaults, and if this trend continues, then as a result, we could be seeing a much weaker stock market. So whereas the stock market has been very healthy this year with the Nasdaq reading the rally, there are weaknesses to be observed in the stock market. On one side, we saw the banking sector holding a lot of unrealized gains, and now we are looking at US commercial real estate holding a lot of potential for risk as well as defaults. And now we are looking at the job data weakening. If the job market is weakening, then as a result of that, we could be seeing much lower prices. So with this in mind, let's focus on the charts and see what we're expecting. So as you can see, tomorrow in the entire economic calendar, nothing much. Sorry, it's right here. Bank holidays in New Zealand, Australia, Switzerland, the Eurozone, and the UK, as well as Canada and the US. So sorry, there's no bank holiday in the US, but all these other economies. So with this in mind, we know that we will be seeing lower liquidity in the markets, but that doesn't mean lower volatility. We could be seeing some high volatility in the markets. So one key focus in the market is the big jump in oil prices after Saudi Arabia and the OPEC Plus nations announced on Sunday that they are increasing the oil output cuts by 1.16 million barrels per day, and this will start being implemented in May. So immediately after the announcement, the market opens with a big gap of about $5. And since then, for the entire week, Brent oil prices have been trading sideways. So after this pullback, market went up and then down, up, down in this particular range, highlighted in red. So investors are now currently tracking the extremes of this range. On the upper side, we have $85.849 per barrel. Then on the lower side, we have $83.432 per barrel. So any break to either side will create a potential trading opportunity. So it's just a matter of monitoring this price action from this price level. If it breaks to the upper side, all breaks to the lower side. So it's a matter of wait and see. So as we get to the non-farm payrolls tomorrow, we could be seeing a lot of volatility happening in US dollar pairs. Remember, for pound, it made a pullback yesterday. We expected some good rally. Today, there was some signs in the London session, but as you can see in the New York session, there was a further dip. And now it basically implies that the markets are consolidating, awaiting the non-farm payrolls tomorrow. So a pattern is emerging here. So if I can remove my previous arrows here and this highlight, then for pound USD, you can see the pattern happening on the 50 minutes chart, and this is more or less like a flag. So flags are very beautiful to trade because they give you a definite area to monitor. So in this case, the area we are monitoring is between these two trend lines. So if the market happens to break either of the two, then we have a direction to take. So for pound USD, since Tuesday, we have had highs and lows following this flag, and this is an indication for a market that is consolidating. Our flagpole extends from a low of about 1.22822 all the way up to this level here. So here we'll be monitoring the two trend lines to see if there's a break on either side. So for New Zealand USD, there was a very sharp drop, and now the market is playing at a very key level. Remember, this is a major support level. So in this case, it could be bouncing from here or breaking entirely towards the lower side. So we had a break during the interest rate announcement yesterday. The market went back into the pattern. So now that the price is back into the pattern, and this is a pattern we've been following for a while now, then the idea is to look at the price action around this area and see if there's a strong bounce way before the non-farm payrolls jobs data tomorrow. So there is a good chance that we could be squeezing in some positions here, especially if there's a strong bounce or even a strong break towards the lower side. So it's also a matter of wait and see. For Euro USD, we mentioned that we're expecting a big jump from here. The area highlighted in yellow, this is the 1 hour chart. So it hasn't happened yet, but now from the last 1 hour candlestick, it's indicating some strength in the euro against the dollar, and there's still some potential for some other further upside. So in the morning, we're expecting some weaknesses in the dollar index. So this did not quite play out as expected. So from here, we were expecting some continuation of this pattern. So the market traded sideways for a while, attempted going up, failed, and now there are indications that the dollar index could continue losing against a basket of other currencies. And if this happens, then the natural expectation is that the Euro USD tests yesterday's highs and potentially another leg upwards. So for USD CAD, we are still in this particular range. We saw the jobs data come, raised volatility towards the upper side, then back down. And now we can confidently say that the market is still trading within pattern. So now the focus moves on to the non-farm payrolls. So no much volatility coming from the Canadian jobs data. So USD JPY making quite an impressive comeback. You can already see the theme is very clear. So in the previous highlights here, we saw candlesticks forming long lower tails on the H1 chart, indicating rejection of lower prices. And now in the last 2 hours, we have seen something similar. So we could be seeing the dollar continue to recover against the yen as the fundamentals get priced in of a much weaker yen. So as for gold, we had a very strong rally. So yesterday, we were expecting a pullback to this level of 2002. Just to zoom out and give you an idea, in the last 2 weeks, we have seen price test 2002 as a resistance and fell in a couple of times before it eventually broke towards the upper side. So now, after breaking towards the upper side, market attempted to pull back yesterday, didn't quite get a proper retest. This morning, it did the same, and now it has made a complete test of 2002 price level, and now it's time to start thinking of a continued rally. So the continued rally is expected to test yesterday's high and potentially move to the last year's high of 2070. So yes, a short-term intraday target remains around 2032. But then if you hold and take the trade for the long term, then the target remains at 2070, which was the high of last year and the high of the COVID year of 2020. So that's it for gold. So we have a successful retest, so potentially a rally towards the upper side. So then for Audi USD, we had a nice break happening here. So just to remove my arrow so that you can see this clearly, we had a break early in the week towards the upper side, another attempt which failed to form a new high before the market got into this triangular pattern. So got back in, retested this high, and then today traded downwards, broke within the last 3 hours. But then after breaking, you can see there's a very strong support area around this region, and it seems like the market is responding to this area. So there's quite a number of times that the Audi USD pair has found support around this area, and now it seems like it's doing the same thing. So now we are trading on an expanded territory. So there's a potential we'll be retesting this area here. So after bouncing from this support, we expect a retest of this area and then some further downside. So a downside would mean the dollar is strengthening again. But then from what we are seeing in the dollar index, the potential remains towards the upper side. So the Australian dollar could start rallying and get back towards the upper trend line. And this is more so, especially if we see a job market that is weakening, which means that the Fed would not be under pressure to continue hiking interest rates. So a much weaker job market reading would lead to a rally in Audi USD, and the rally could move past this blue point, get to the upper trend line here, and even the previous high all the way up. So it's a market that is very simple to observe. You just have to follow the data and see where the price takes you. So for US equity indices, they are still showing some form of weakness for the last 3 days. So Tuesday dropping, Wednesday dropping, today attempting to push further down, say for the last 1 hour. Same case for the US 30 or the Dow Jones, and also for the US Tech 100, we have had quite some nice pullback. So for now, following the report that we saw with the jobless claims, there's a widespread expectation that the NFP job numbers will be weaker. So while on one side, we expect the dollar to be weakening, the equities could start strengthening or recovering from the recent pullback. So potentially retesting the previous highs. So what we are seeing in the last 1 hour after the data was released, we could be seeing equities beginning to recover. US Tech 100 leading the pace. US 500 or the S&P 500 also making an impressive turn here. But then the Dow Jones seems to be the slowest one. So for the FTSE, that is the UK 100, made quite a good recovery, retested the week's high and is now cruising even higher. So as it continues moving higher, then we are now monitoring 77.75 as a short-term target. And once it gets there, then we'll look for what the price is indicating. This could be a rejection or a continuation of the bullish momentum. So for the besides that, for Brent oil, I think I've already mentioned this. I don't know if there's anything I've skipped. Yes, I've gone through all the major pairs. We have looked at gold, oil, and US equity indices. So those are usually the main highlights for the series. And now we can skip that part and move on to the next part of the presentation. And this is looking at the major highlights in the markets today. So initial jobless claims came in at 228K, which was much higher than the expectation. The revised was even higher at 246K. So when jobless claims are rising, these are the people who basically filed for the unemployment insurance for the first time in the last 1 month. And this is a clear indicative of the labor market conditions. So comment from Fed's Bullard, I want to see a clear downward trend in core inflation. So remember, all the focus for the Fed is on inflation. So if inflation is slowing down, then that would be the precursor to seeing the Fed holding rates or even going for a pivot and starting to cut interest rates. So another comment from Fed's Bullard is that the reverse repo is functioning as expected. So this just happened a couple of minutes ago. This was 6:45 p.m. Then banks report that loan demand remains strong. Yes, there is a very high demand for loans, but then the way people are servicing those loans now becomes the newer concern. So I'm pretty optimistic the Fed's bank strain action will be effective. So yes, they could be able to stabilize the banking sector through the BTFP program, but on the other hand, it's basically kicking the can down the road since the loans are due to mature in a year. So once the banks borrow from the BTFP program, a year down the line, they'll still be facing the same problem and they will need to repay that. So if their books are not healthy by then we'll be facing another macro issue with the banking sector in the US. So tighter financial conditions alone will not result in a recession. This is from Fed's Bullard. But we all know that if unemployment conditions start getting easy, from what we have seen with the jobless claims, then the recession talk could be back on the books. So due to inventory shortages, the housing market appears to be still constrained. So that's still a concern to be looking at going forward. So from Fed's Bullard, he basically mentioned that we should continue on our rate path, and the rate path now is expected to move for another rate hike from 5% to potentially 5.25%, but there's still more data that is expected to be seen in the market before we get to the next Fed meeting. So that's it for today. Thank you very much, guys. If there's any questions, I would like to check on them before we end the session. So far, I don't see any messages coming from you guys. So thank you very much. Thank you for your time. Enjoy a happy Easter as well as a Good Friday. And I hope to see you on the next session, which we'll be holding on Tuesday at 11 a.m. as usual. Remember, Monday is a public holiday, so I'll be taking a short break. So as you enjoy the weekend, also remember to check out some of our top episodes on the Bullish Banter podcast. They're available on all devices, on YouTube, on Apple, as well as on Google Podcasts. So there's a comment, check on pound yen. I'll be doing that right away. So this is a chart of pound yen, made an impressive pullback for the last couple of days after forming this particular shooting star at resistance. So you can see the resistance level and where it was holding. So this was the high a couple of weeks ago. So we had a very good run on pound yen last week. And then at the beginning of this week, a continuation higher. We go to this resistance, a rejection of higher prices. And then since then, you can see the prices pull back on Tuesday evening, then on Wednesday, even down lower. But then from today, we are seeing a reversal of this trend. So there is an expectation that the pound will continue strengthening against the yen because fundamentally nothing has changed. The yen is still weak and we could be seeing some further downside in the yen. So pound yen is still tilted towards the upper side. So after this very important pullback, you can see how the resistance here was almost the same level acting as support. And now we could be seeing another run towards the previous high, bouncing from this level of 163.279. So another rally towards the upper side could be on the books. So you just have to be prepared to enjoy this as it goes back up. So with less activity on the economic calendar and banking holidays on Friday as well as on Monday, then the potential for these becomes highly likely. So thank you very much, guys. See you on the next session on Tuesday.